Well, good morning again. My name is Ramzi Fawaz. I'm the Senior Vice President of Projects in Newmont Mining Corporation. I think those of you who were there earlier in the morning, I described what we do around the world. And today what I'd like to do is give you a presentation on a number of things. First of all, a little bit about gold. Then I'll talk a little bit about the company, my company, Newmont. And then finally, I'll talk about our operations in Ghana. It's a Middle East and Africa project and conference. So I'd like to talk about that at the end. So it's like a three-section presentation. Before I do that, the usual cautionary statement, because I speak about forward-looking stuff, and if you want to look at our SEC filings, you can go to newmont.com and find what it is. So, as I said, I'd like to start with what is gold, because there's a lot of beliefs and misconceptions sometimes. And as you know, gold has been here for long time, prehistoric times. It has a value, and in times of financial turmoil, people, investors resort back to gold because it has the most stability, and especially at times of turmoil. And even up to the 16th century, for example, people used to think that gold grew like a plant under the ground. And they said, well, we're not gonna mine it all because we want to keep some seeds so that gold can continue to grow. And that's the belief until the 16th century. And of course, gold is a precious metal because there's so little of it. You can imagine that a 5-ounce nugget, for example, it's rarer or more difficult to find than or 1-ounce nugget more than a 5-carat diamond. That's how rare it is. And if you look at how much has been mined throughout the years, 175,000 tons, which in, for example, iron ore industry, you can mine this in all the mines around the world, you can mine it in less than 1 hour. And that's how much we've produced in terms of gold in all the time. And you can put it in a crate of 20 cubic meter crate. That's how much we have actually produced throughout the years. 90% of it has been produced since the golden California gold rush in the mid-1850. And at that time, there were like a few hundred, maybe a few thousand people working in finding the gold, and now there are 100 million people who are one way or other associated with gold mining, if you can believe that. So if you look at that mask, for example, King Tut, 240 pounds. Nowadays, this mask, if you want to buy it, it costs you $5 million to do so. And what governs the value of gold is the supply and demand basics. And it all depends on how much the investors feel about gold and how much they value the metal. And sometimes gold follows the supply and demand cycle and laws, but many times it breaks it. So for example, if you look at the political upheavals that we have, the recent hostilities between Russia and the Ukraine, gold price stayed flat. And then when we had the Malaysia airline unfortunate incident, gold price went up. So sometimes it follows the uncertain times or upheavals, and sometimes it doesn't. It's very, very strange. In general, though, at time of financial turmoil, investors do resort back to gold because it gives them the most stability, better than stock and bond and currencies, and that's why it's been here for such a long time. Where does it go to? More than 50% in jewelry. And as you've heard from us earlier in the morning, China has now overtaken India as the biggest consumer of gold, both in terms of supply and now demand. India is second. 40% of it goes in terms of investment, whether it's gold coins and bars and other investments. Central banks, for example, they are still net buyers of gold. So that takes 40%. and then only 10% goes into the industry, like in dentistry, medicine, technology, screens, and so forth. As I said, China leads the world. Last year it took over from India in terms of demand, and they also are the biggest producer. But what also is interesting is that 25% of the supply of gold comes from small artisanal miners, so a quarter of all supply. And of course, the unfortunate thing is not all of them produce it in a safe, environmentally friendly way. So we work sometimes with governments to help govern that and help them get better and environmentally friendly. And of course, there's always the scrap gold metal suppliers. And at times of high gold prices, you'll see them all over the place, especially in places like North America and Europe. But when the gold price goes down, you don't see them around. So they sort of balance the market as it moves. Yeah, what else? What differentiates gold companies around the world? It's a question of where are we now in the cycle, and what we're finding is most of the assets are aging in terms of they've been there for a long time, the grade has gone down, and it's declining. If you look at the graph here, the amount of exploration money spent on finding gold has gone up by five times, yet the major discoveries of gold have been maybe one or two in the last decade. So although we and other companies are spending a lot of money in terms of exploration, big discoveries of gold mines have gone down, and because it's difficult to find, as well as once you find it, it's difficult to actually mine it and have a project which is profitable and viable and be able to realize it. You know, one of us were saying it takes years from finding the gold to actually producing it, sometimes between 15 to 20 years. It takes a long time, a lot of investment, and a long time strategy. And as I said also earlier, that there's a rising expectation from host countries about generating revenue, improving their economies, increasing employment. So there too, there's a balance of where the mining companies can mine, as well as balancing it with what the host countries want and expect. Increased competition for natural resources, less water, power in certain areas, and people. And this is the last bullet here. Competition for talent is becoming more and more severe, and therefore it's getting more and more difficult to produce those mines. As I was explaining earlier this morning, so what do the governments want in general? There are three things that we are seeing more and more. They want increased taxes and royalty, because again, they see sometimes the gold price going up, and they say, well, what's our share? And as I said, we didn't help ourselves a lot by just talking about the bare cost of producing gold, but there are other things like sustaining capital and dividends and so forth, which make producing gold much higher than maybe what people thought. So they would like to have more tax and royalty. They would like to have more ownership. So you have some countries where they would like to have more, own more of the mine than just tax and royalty. And some of the countries we deal with, they would like to build some infrastructure in their own countries to be able, for example, to have smelters rather than just take the copper, for example, to outside. So there are more demands from host countries, and all the gold and copper companies are seeing that. And as I said, competition for water, land, and energy is only increasing. By 2025, we know that there will be severe water shortage around the world, and that does affect, of course, where you mine. On the other hand, as we were discussing earlier this morning, there is expected to be increase in growth, and if you look at the rising graph here, both BRIC and emerging countries. We do expect that with time there will be more urbanization, like China, for example. We expect like 300 million are going to move to the big cities, increase their standard of living, and by that does require more demand, whether it's basic metal or gold. And again, gold is sort of a status symbol, and you can spend it, store it, or flaunt it, but it's a proxy for wealth. And that's why with this demand around the world, we expect that the demand for gold and precious metals will increase. So that's a little bit about the gold industry, supply and demand, and where it comes from, and the challenges. Now, when we talk about my company, Newmont, these are the 5 pillars of our strategy, and it starts with health and safety, making sure that our people are safe and they come home safe every day. And I can tell you that, and I'll show you a graph later, that we spend a lot of time making sure that that happens, because that is the way to operate, and that's the way to protect our people and our business. Operational excellence, you can't do anything without streamlining your business. If you think back, a phone, for example, a cell or a mobile phone used to cost thousands of dollars in 1975 or thereabouts, and now it costs maybe $100 or $200. Cost of doing a mine, though, has gone up. So whereas it used to be about maybe $500 per ounce of producing annual ounce of gold, now it's 4 or 5 times that much to build such a mine. So it goes the other way. And that's why you've got to be efficient and cost effective in how you develop the mine, from exploration to doing the feasibility studies, to actually developing it and operating it. And that's what we do. Growth value creation is finding the right project to do, which is value added, not just for the sake of ounces, but it adds value. And then divest something that you don't need. So it's that balancing of the portfolio in terms of organic growth and divesting what you don't need. Sustainability is important, because if you don't have acceptance by the government, by the communities, you won't get a permit and you won't get the social license to operate in a certain country. So we need to do that well, and we try to. And then finally, it's about the people. It's the people you have to run those mines, first build them and then run them, and that's the most precious thing you can have in a company. This is our safety record, just to show where we are. Our TRAFR, total recordable accident frequency, and that's based on 200,000 hours, has gone down throughout the years, and we're proud to say we're the best in the mining industry from that point of view, and we are now at 0.32. Very proud of it, but as I said, it takes hard work, and it's from the top down to the lowest ranks, and we're very proud to be one of the safest companies, mining companies, to work for and keep our people safe. In terms of what's happening in terms of new technologies and what's helping us to find this lower grade ore, or work in remote areas, or be more cost effective and streamline operations, there are various initiatives and work that I cannot list all of it here, but you can see some of the examples I've listed here, from autonomous mining equipment, in-pit crushers coupled with conveyor systems, X-ray, color, or electromagnetic ore sorting to be selective in how you mine your ore, deep sea mining, and we do a lot of innovative things in terms of exploration, with airborne exploration, with electromagnetic and other methods to be first in finding where the gold is, and then going and drilling and finding it, and so on. So there are a number of other examples, and the point I would like to make here is none of those is going to make a huge development or increase in terms of finding more gold. It's going to be more of a small step increases, which is bit by bit, rather than a major improvement in discovering and developing gold mines. Where are we operating? These are the 5 or 6 areas we operate. North America, in Nevada. That's where we have our mines, like 1.5 million ounces. We work in Peru, and recently we've started a mine in Suriname called Merian, and it's about $1 billion project, producing about 450,000 ounces a year. We work in Africa, and that's why I'm here, in 2 mines, a Ahafo mine and in Achim, and I'll talk more about it at the end. We also work in the APAC region, in Indonesia, and Australia and New Zealand. This is just a number of our projects and that we're actually working on. And the point here is some of them are under construction. This is the one I just described in Suriname, and then this is a ventilation shaft in Nevada, and another underground mine in New Zealand. Some are in the feasibility or pre-feasibility phase. 3 of those are in Ghana, Ahafo Mill Expansion, Subika Underground, and Ahafo North. And a number of other ones are in either South America or in Nevada. Again, to be able to be a successful gold miner, you've got to find it first, and we're proud to have a good exploration department that has a very good record of delivering on reserves and resource. 95 million ounces of reserves at half the industry average cost, 6 major greenfields and 3 brownfields, and 7 in the making. We have a very disciplined way of rate and ranking exploration targets, and then how we get them through the pipeline of projects I explained to you. And we think we're a sector leader in that approach. Picture you find here is from our Long Canyon project in Nevada. And then I'd like to move to Africa, because that's where the conference is, and mention two operating mines we have, one in Ahafo. I see some of my colleagues here from Ahafo are here today. And the new mine that we commissioned last year called Achim. Very good operations with a lot of growth potential in both areas. We had to optimize mine and milling rates in Ahafo mine recently, just to make sure that we get the most streamlined and efficient operations. Together, you can see our costs for operating, consolidated CAS we call it, cost at sales, and all-in sustaining costs with the outlook for the year. And then the total production is going to be between 800 and 900,000 ounces from both mines. And specifically on the Achim project, which I personally was responsible to head, this is a very good success story for us. 7 million ounces of reserve, and reasonable grade, 1.8 grams per ton. Average annual production, as I said, 350 to 450, and you can see the rest in terms of costs. Reasonable costs, one of our lowest cost producing mines, so brings our overall portfolio costs down. And we built the design based on our existing sister mine in Ahafo and sort of duplicated it. Where we did do, I think, very well is in the strong community focus that we applied. And one of you asked the question this morning, what do we do? We had to resettle a number of communities to be able to develop the mine. So we built a village and resettled 240 families. All our, the workforce, of course, comes from Ghana mostly, and half of them come from actually the locals, or from the region surrounding the mine. And then I'll show you a number of projects that we did around the mine to be able to promote regional support and economic development. This is just a timeline of how we built the Achim project. As I explained earlier, it takes years to build those projects, and this is just the last, call it 4 or 5 years. I joined Newmont in 2011. At that time, we took the full funding on final investments decision to proceed. And then we had it commissioned and working end of last year, 2013. Very successful and very safe, 13 million man-hours without a lost time accident. Now it's operating, as I said, at very low cost and and reliably and good availability. These are some of the projects we did in the surrounding communities to make sure that we do engage the local population and the local villages. We built a number of projects either in the health sector, so we extended, for example, the hospital next to the site. We built water systems, sanitation systems. We engaged with the communities in a number of social fronts. And as I said, we resettled the one or two communities to be able to build the mine. So all in all, we thought a very successful win-win situation, both from our side, from the government side, and from the local communities, and we're very proud of that. So finally, just to conclude, we in Newmont, we think we're using the right tools, the right approach, from safety to exploration to development to operations. We are streamlining our operations, becoming more cost effective in as much as we can, because that is what people expect of us to do, and that's the only way to be able to survive a turbulent time. We work on our growth and rationalizing our portfolio, whether it's building organic growth projects or divesting or even acquiring assets where necessary, to make sure that we have long life mines which are low cost and efficiently operating. And we keep a strong balance sheet to be able to afford our operations and be able to withstand the fluctuations in pricing and so forth. So that's what I wanted to share with you today. It's the end of my presentation, and maybe I can take some questions.
Thank you, Ramzi. Does anyone have any presentations on the floor?
Ask about these projects from the environment, you know.
From environment?
Yeah.
Mm-hmm.
What the problems facing the mining project? Okay. Is the environment will be the power to start like these projects, or it's very easy to mine without looking to the environment around, you know? It's housing or towns or agriculture farms, or what do you think about that?
Well, it's
environmental also getting some.
Thank you for the question. I think it's relevant in many ways. You cannot build a mining project without having call it the permit to build one from the government. And what does that mean? That means you have to do an environmental impact assessment, which means you do the baseline study of where you are from all the environmental factors as well as social factors. Then you establish what the mitigation factors are, mitigation measures that you have to do to be able to mitigate the effect of the mine on both the environment and on the social communities. And that is a process that takes years. So you've got to start your environmental impact assessment 2 to 3 years before you finally decide to proceed. So this is work that we normally do, sometimes with consultants, with contractors who work for us. But it's imperative that you do that, because that is your license to be able to get the permit to build the mine. It starts with exploration, but and as I said, it takes 2 to 3 years. So to give you an idea, from finding a gold deposit to the time you actually decide to go ahead and build a mine, and then it takes 3 years to build it. That definition phase, which we in Newmont we build those projects in stages, from exploration to scoping to definition. In that period of 3 to 4 years, you have to apply for this environmental impact assessment and get a permit. So before you actually start constructing, you need to get the permit. And that takes 2 to 3 years at least, depending on which country. Some countries even longer than that.
Thank you. I think Yes, my name is Gary Patrick. I've been in mining for about 20 years. Well, one question is, we've been in recession for 2 to 3 years. I know you don't have a crystal ball, but I mean, where do you see the mining industry going? I mean, or do I find another job? I mean, I heard, it's been 2 to 3 years of recession, and well, from mining point of view, and then you hear another 2 to 3 years. I mean, what's the long-term forecast?
We genuinely believe that it's good business to be in mining, and I mean it. We think that there is hand in hand with the economic development of the world, especially in China, but other countries as well, in the developing countries, that there is room to grow and a lot of room to grow. So we strongly believe, I think I've shown you a graph of where the economic growth will go for demand for metals, all metals, base metals and precious metals. So I would say keep your job, because I think you're in a good industry, and I think there is growth to be had in the industry for a period of time. Now, of course, there will be cycles. Take gold, for example, it goes up and down. But it's the people who survive are the people who operate efficiently, streamline their operations, consolidate their assets, and those are the people who can withstand the cycles. Long term, though, we think there is a strategy and there is growth, and we believe that, as I said, there will be good business to stay in mining.
So basically just ride out the
Yes,
storm.
ride out the storm, yeah.